Welcome back to another Stocklabs market recap. This is for our Thanksgiving trading week that was sort of, we had Thanksgiving off. We had a half day in there somewhere. So it was kind of holiday shortened. And then, we had our day on Friday that was supposed to be uneventful, but turned out to be pretty eventful. But yeah, so, coming into this week, I thought that we were in for sort of just a nothing week. Maybe we move up slightly, having been soft for a little while since the first week of November. Normally, people aren't looking to make, you know, big decisions, on these sorts of holiday weeks or um, anything like that. But we turned into, it turned into a pretty, bad week overall. Everything was basically being sold all week. And then on Friday, we had a bit of a news-driven sell-off, which sort of accelerated the selling we'd seen earlier in the week after Thursday. I guess Thanksgiving basically evening. Um, we kind of got news of a new COVID variant, and no one knows anything about it. It's just that oh, it's new, and the news dropped obviously when, basically while the futures market was opening, on Thanksgiving. So everyone was laid up on the couch watching football, having pumpkin pie and yada, yada. And, the market got to selling, and it followed through, basically all day Friday. So, Friday was supposed to be another sort of low volume day, you would think, just looking at the day on the calendar. But it was, there was plenty of activity on the downside. So yeah, overall, pretty terrible week. Actually, I think it might have been the worst Thanksgiving week in. Off the top of my head, I can't remember one worse that I've seen. So maybe we have to go look at some historical data to find a worse Thanksgiving week, but I don't remember one. So, yeah, not that me remembering anything is the end all be all, but I'm just trying to think of having seen something worse than what we just saw, and yeah, I don't think there has been, at least for a while. Um, if there has, someone can comment, call me an idiot, like, oh, 2015 was terrible or something like that. Anyway, yeah, so for the week, Dow down 2%, S&P down 2%, Nasdaq down 3%, and small caps down 4%. Small caps really been like a wild set of stocks. It looked like they had broken out, then turned into sort of a failed breakout. Now it's going back to the looks like it's going back to the bottom of its range or whatever from the year. So this Russell, it more or less trades in straight lines for a couple weeks at a time. Straight up, straight down. It's kind of insane. But yeah, right now it's back in liquidation mode. So we'll have to see where the buyers step back in. Um, and if we go to not that. If we go to our mega caps, our leaders of the market. Should probably put Nvidia in here too, but I'll put it in there when I see it. Okay, so week to date, Netflix down 1.6%. So well, first off, they were all down. So it's basically liquidation. Netflix outperformed. I mentioned the new COVID thing, so it's sort of a social distancing, stay at home play. Makes sense that it outperformed a little. Apple down 2%, basically in line with the market. Facebook down 3%. Microsoft down 4%. All these are down basically 4%, which, all things considered, is not. It's actually decent, because if you were in some other type stocks this week, you were getting crushed way worse than this. So I mean, you can see that these mega and terra cap stocks, they're, it's like, oh, they're outperformers on the way up, they're outperformers on the way down. I mean, what are you going to do? Um, so let's look at by market cap. Um, okay, so our 1 to 5 billion cap stocks down 3.6%. 5 to 10 billion down 2.8%. 10 to 50 billion large caps down 2.4%. And mega caps 50 to 100 down 2.6%. Terra caps were down 1.8%. Okay. So, I mean, it's a pretty clear distribution. The smaller the cap, the worse you got hit this week for the most part. Generally, that's the pattern that we see. Um, especially during sell-offs. Sometimes the smaller stuff will outperform on the way up, but it's rarely outperforming on the way down. I would say, like, you need like a special set of circumstances for the small caps to outperform during a sell-off versus the large caps. It just doesn't happen. And then if we look at our industries for breadth, so I mean, breadth based on market cap was terrible, and then by sector it was also, nothing that none of these sectors you'd be proud to be, say like, oh, it was a good thing I had exposure in here because they all got hit. So healthcare, I mean, again, 4%. Tech even down 4.4%. Tech, worst performer. It doesn't happen very often. Um, we only had 5 sectors that were even green on a median basis, and they were barely green. 1% was the best one, top performer. And then on the downside, we got a lot of stuff getting torched. So solar got hit. The movie theaters obviously got hit. A lot of reopening plays, had hard reversals, obviously, especially with the renewed lockdown fears and all that goes with it. So let's see, 25, 6, 7, 8, 9, 10. So 30 sectors down 5%, which is a lot, especially compared to, there were almost no sectors that were even up. Um, but it could have been worse. I mean, we've seen weeks where it was worse, where we might have 50 sectors down 5%. So hard to say. There's basically no upside breadth and a lot of downside breadth, but the downside breadth wasn't as severe as sometimes you see, if that makes sense. Sometimes we could have, say we had 20 sectors that were up, but then the sectors that were down, even more than this is what I'm saying. Uh, so a lot of downside breadth, but not a lot of extreme downside breadth. Um, okay, we'll jump back into screener and go to intelligence. Okay, so PXJ is oil and gas for a bounce. Not sure on that, but I guess if you've missed a lot of the leg up in oil and gas, or just energy in general, maybe it's a spot that you could get some exposure, but um, I'm not interested in it personally. Uh, okay, ultra short silver is bullish, so silver is bearish, and Hibble is bullish. So this is high beta stuff. I mean, actually, a lot of the oil and gas stuff would be in here too. Oil and gas names, generally small cap names, or whatever. But you can see, I mean, they got roasted on Friday, and yeah, they're only really, this is not much of a bounce when you just got hit 12%. So I wouldn't be that excited about that. Negative and okay, Okay, so this is the other side of the coin from Hibble, um, and Sox is bearish, so bullish semiconductors, and semiconductors means obviously a very trendy trade. So, I mean, if anything's going to bounce, I'd rather take a shot on semis than something like high beta or oil and gas. But um, we'll just have to see. We did have briefly, I forget which day of the week it was, but we were briefly oversold at one point. I'm forgetting if it was Wednesday or Friday, but we had 3, 6, and 12-month oversold intraday. Um, None of them ended up locking in on the close, so there's nothing to do with that. No signal yet. As far as intelligence goes, intelligence is, I'd call it rather bullish here. Um, on the hybrid side, the win rate is, pretty high, over 2/3 for everything. But the sort of returns aren't going to knock your socks off or anything. I mean, 1.5% in 2 weeks after you just drew down 4% or whatever it is, you know, not much to be excited about. So I would wait for one of these signals, these oversold signals. So if we look at like 6-month hybrid, you can see it's close. Has to hit 2.27 to 2.34. So that's like another decent down day will lock that in. If we, yeah, and 12-month is just below that. So 2.24 um, for oversold on the hybrid side. And actually if you remembered in the past, like from a few months ago, I was talking about how I was always deferring to the 6-month algo because it had more um, data points, and the 12-month algo didn't have any data points. It had like one. Well, now we're up to, we've got 3 data points on here on 12-month. We could start sort of shifting over to maybe viewing them in tandem. They're kind of close to each other. The 12-month is at a 2.24 hybrid score. The 6-month is at 2.27 hybrid score. So they're very close. But the 12-month is, starting to become a little more valid as far as uh, being able to be relied upon. So I would look out for that. 3-month, we don't, I can't see. Well, we don't have it yet because I saw it on the chart, but I can't see the number here, 2.3 something. Anyway, yeah, so that's basically it. I'm waiting for, one of these oversold signals to hit. Like I said, 6-month or 12-month, I think will be good enough to, get a bounce out of the market. We're trying to finish up November here, and, it started off pretty, started off great. That first week was like everything was go, go, go. You had the Russell up 6.5% or something. Now I don't even know if the Russell's up month to date. So we're going to finish out November on Monday or on Tuesday. So I wouldn't be surprised if the market just slid into the end of the month, just because it's like people people got all bulled up the first week and then got whacked for 3 weeks, and now they're kind of just like, get me out of here for leading into December, for month end. So I wouldn't be surprised for some incremental weakness to start next week. Hopefully that gets us, and hopefully it's weak enough that it gets us one of those oversold signals, and then December can maybe take off a little bit into Christmas and all that stuff. And I mean, obviously, none of that stuff, it's not guaranteed. Santa rally and all this stuff like that, but especially it's hard to even think about it now that we just got whacked over Thanksgiving. But um, I think that's the more likely scenario. So week into the end of November, and then sort of start moving higher again. At least the first half of December. Yeah, so that's basically it. Sorry I got this out a little late. I've been pretty busy, but yeah, we'll see how the trading week goes, and talk to you guys next week.